Welcome everyone to Vested Interest. This is Shane back for the last stock pick of the day video of the week. It is May 8th, Thursday. We're going to take a look at Clear Secure. We have covered this one in the past. It is out of the information technology sector. I think we covered this back in August, September, October, sometime in that frame last year. Before we get too far in the video, if you could do me a big favor, all this really does help out a small YouTube channel like mine. With the YouTube algorithm, it helps to spread the videos a little further. If you would take a couple seconds, it's free to do, just costs you a couple seconds of your time. Hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that notification bell so you're notified whenever I put out any new content. I do this stock pick of the day video series Monday through Thursday. We take a look at a company's stock that's pulled back on the day, run it through my screener, see if it makes it onto my watch list. And just because it makes it onto my watch list, if it does not necessarily mean that I am buying. It just means out of the thousands of stocks out there, it is a quick way for me to see if I'm interested in doing more of a deep dive into the financials of the company, the balance sheet, the income statement, stuff like debt to equity ratios. Do they have more assets over liabilities? Are their margins expanding? Is their revenue growing? Are they buying back shares? Are they paying down debt? How do they compare to competitors if they have any? Things like that are what I'm looking for when I'm doing more of a deep dive. But because there are so many stocks out there in the market, I don't want to waste my time doing that if I'm not interested and it doesn't meet my initial screener, which is what this is. Special thank you to the viewers and subscribers of the channel. The channel continues to grow because of people like you, so I really do appreciate it. And thank you to everyone who's taken the couple of seconds it takes to do all that. If you could share with anyone you think that might find value and watch to the end. Watch time is one more metric that the YouTube algorithm looks at as well. Again, thank you so much. And this is the vested interest stock screener. You can pause this and run through the criteria. It must meet 5 of 8. If it was a bank out of the financial sector or a company out of the financial sector like an insurance company, we would add in price to book using 1 for fair value. Don't blindly use 1 for fair value with price to book for companies outside of the financial sector. You want to be looking at their price to book, compare it to themselves over time, as well as to other companies in the same sector doing the same type of business. Back to Clear Secure, you can check them out on their homepage, www.clearme.com. That's www.clearme.com, www.clearme.com. That is their homepage where I pull this information from. Since day one, we've been obsessed with making daily life safer and easier for you with our secure identity platform. All you need is you to move freely through your world. And that's really their bread and butter, right? So here are some of the ways that you can use their product. TSA PreCheck, right? So it is basically a way for you to go through airlines, right? Sports, if you want to go to a baseball game, football game, something like that. Arenas, when you go to the arena, they'll check maybe your ID and make sure you have a ticket, make sure you're the person who bought the ticket. So they are setting that up beforehand so that you can kind of go to the head of the line. A lot of times they'll have their own lanes, especially through TSA. They have their own fast pass lane where if you've already done this beforehand, you basically skip the line. They've already seen who you are. You've already proved who you are, your identification there, and you jump to the front of the line. That is really what this company does. That is their bread and butter. It is a security company helping you to basically, like I said, jump to the front of the line by already proving who you are before you get to, like I said, airline or a sports arena. I'm sure there will be more of this going forward as the world gets more unsafe and people are more worried about security, proving who they are to get into events, that sort of thing. Again, check them out on their homepage, www.clearme.com. If you want to know more about the company, and if you want to buy a company, you definitely should know more about it. Now, the reason we are taking a look at this, down 7.5% on the day, we are talking about Clear Secure, ticker YOU, out of the information technology sector. Closed out the day at $24.28 per share. Looks like they're up slightly in the after hours there. 52-week range as low as $16.48 per share, as high as $38.88. They are not within 15% of a 52-week low. They need to drop under $22 and some change. Market cap is $3.22 billion, so they are a small cap company. A beta of 1.23, so they are more volatile than the overall market. You might be able to use that volatility to your advantage. PE ratio, price earnings ratio, is $15.51 per share. Earnings per share, EPS, is at $1.56 per share. Earnings date was May 8th, or is May 8th. That'll be tomorrow. So look for that. If you're interested in this company, you'll probably want to check out their earnings report. Forward dividend is 50 cents. They are a quarterly payer, so divide by 4, though we will see that here towards the end of the video, with a starting dividend yield of 1.9%. Ex-dividend date, June 10th. Looks like last one they paid out on March, so they're going to pay out sometime in June, but they don't have it listed yet. Ex-dividend date, 1 year target estimate, at least according to Yahoo Finance, where I pulled this information from, $29.12. So they do see some upside from where it currently sits, but not getting back to its 52-week high, and not really even close to its 52-week high, actually. Jumping over to the right, typically I look at dividend yield theory to see if the company is potentially undervalued, but this company does not have 5 years of dividend payouts for me to look at, right? So we can't really do that right now. Payout ratio is low, though, at 26.6%, so it looks like the dividend is safe, and they have plenty of room to raise that dividend, which is what we want as dividend growth investors, or we should. Now, looking at free cash flow, I want growing free cash flow, because if a company has grown free cash flow, they can do some things with that cash. They can pay down debt, they can make acquisitions, reinvest back into the company, they can carry some of that cash on the balance sheet in investments or in cash in general if they want. They can pay a dividend, which this company does, and they can raise that dividend over time. Now, going back here to December 2021, you can see they were at $40 million in free cash flow. December 2022, $136 million, so nice growth. December 2023, $198 million, again, nice steady growth. And December 2024, $283 million, another step up. So nice steady growth in free cash flow. They are also repurchasing shares, but again, you want to look at issuance of shares versus the repurchase of shares. Just because they're repurchasing shares, if they are not buying back more shares than they are putting in the market, they could still be diluting you as a shareholder even while they're buying back some shares. And going back to this, and we'll see that here towards the end, whenever you see a negative or positive around the shareholder yield towards the end, or shares, you'll see here towards the end. I'll talk about that then. December 2021, 11.7 million in shares bought back. 2022, 4.9, so a little bit of a drop there, even though their free cash flow went up, but then a big jump up. December 2023, 69 million, 0.6 in repurchase shares, and even more in 2024, 272 million pulled out of the market, almost 273 million actually. Now, jumping over to StockAnalysis.com, this is another source I go to for information. I am not affiliated with StockAnalysis.com or Yahoo Finance from the previous slide, just 2 sources I go to for information, and I do recommend more than 1 source, 2 if not 3 sources, so you can make sure the information you are looking at is accurate and up to date. It is a way to back check that you are looking at accurate information, looking at multiple sources. Just my opinion, you shouldn't blindly trust any one single source when you're looking for data and looking for information. Now, there are 4 analysts from StockAnalysis.com that have taken a look at this. They call it a consensus buy. It is kind of on the hold. If you were to go to StockAnalysis.com, you could click on each one of these tabs, see how many might call it a strong sell, a hold, a buy, or a strong buy. But the consensus of these 4 analysts, anyway, is a strong buy. Low estimate of $26. It currently sits lower than that. So if it came back up to their low estimate, that would represent a 7.84% increase from where it currently sits. Average estimate of $33.50. Pretty close to what we saw with Yahoo Finance, a little bit lower, but that would represent a 38.95% increase. And if it happened to hit a high estimate of $45, which would be a new 52-week high, that would represent a 86.64% increase. And you could collect that 1.9% dividend yield along the way. 50 cents per share per year. But again, they pay out quarterly, so we'll see that here in a little bit. Now, I like to look at return on capital employed. It's kind of a mixture between return on equity and return on invested capital. I want 10% or better for this metrics. They're sitting at 31.83% on return on capital employed. That is really good. Anything above 10% is pretty good. Anything above 15 to 20% is really good. Anything above 30% is just smoking high. EPS growth is not listed. I didn't like that, but their revenue growth was forecasted at 9.37. Revenue growth is not something I look at as part of the initial screener, but it is something that I look at as part of the deep dive, so I do like to include it here. But it will not be part of the metrics we are looking at today as far as whether this makes it onto my watch list or not. Now, again, quarterly payer here, they're saying the payout ratio is a little higher at 47.79%. So this is where you'd want one of those third choices, right? So there is a discrepancy between mid-20s to mid-40s as in their payout ratio. Their dividend growth is negative is what it shows, but I think that's a little bit misleading. Let's look at that. They do kind of bounce around all over, but let's look at that here in a minute. I think they are growing year over year, but they kind of pay out wonky where they'll go up and down with their payouts. Let's look at that here in a minute. But buyback yield, this is what I was talking about. Your buyback yield, this is in reference to your share buybacks. You want this number to be positive, because as we saw, even though they're buying back shares, they're still negative. That means they are issuing more shares than they are pulling out of the market. Even though they're buying back shares, they are not buying back enough to actually decrease their share count. Shareholder yield is negative at 54.6%. Now, they do pay out like most companies do, March, April, June, September. That's pretty much in line with most companies' payouts, but it looks like sometimes they pay out in December, sometimes in November, which sometimes happens as well. If they typically pay out on a Friday towards the end of the month, and that Friday or on a date towards the end of the month and it falls on a Saturday, they might shift it into the following month. So that's not uncommon, but they typically pay out like most companies on that set time frame: March, April, June, September, December. It looks like they may even throw in a special dividend from time to time. March, April, June, September. That would be 5 payouts. So maybe they throw in a special dividend from time to time, but typical payout for most, like most companies. Going back in time here, November 2022, you can see they paid 25 cents. May 2023, they paid 20 cents. August 2023, 7 cents. November 2023, 64 cents. And then February 2024 to 9 cents. March, which would be their typical payout, is 32 cents. Then June, 10 cents. September 2024, 10 cents again. December 2024, 12 cents and a fraction of a penny. Then jump that up March 10th. So you'd really want to look at their overall payout for the year and kind of see where they're at. But they do kind of fluctuate and bounce around with their payouts. Looks like they have one big payout per year around the March time frame, but then the other ones are around 10 cents or so for other ones. So it kind of skews the dividend growth number, but they are consistent. I will say they are consistently paying out. I won't give them growing dividend. I will give them a consistent payout. All right, let's run them through the screener. Understand the business. They are, like I said, they are basically a pre-screen, making sure you are who you are, so you can jump through the lines a little bit faster than someone who has not gone through a pre-screening to prove who they are. Identity, security, company. Growing free cash flow, yes, definitely growing free cash flow over the last 4 years. Nice dividend, a nice free cash flow growth actually. Growing dividend. I am saying they are growing the dividend. I can understand if you weren't going to give them that, but I would do the math per year and see where they're at. Like I said, they do pay out special dividends. So if you didn't include those, or it looks like they pay out special dividends from time to time. So if you didn't do that, and I understand some people might not like them bouncing around the way they do, I gave them growing dividend here. Check there. I can understand if you would not. Dividend payout ratio is under 75%, whether you went with the mid-20s or mid-40s, both are under 75. And if you added them together and split the difference, it'd be around 30. Dividend yield theory, we don't have enough data yet. It is not within 15% of a 52-week low. It needs to be around $18 and some change to be within 15% of, or I'm sorry, $22 and some change to be within that $18 52-week low. Return on capital employed was smoking high in the 30s, very nice number. They did not have earnings per share growth. So depending on what you did for growing dividend, if you said no, it would only be 4 of 8 and not make it. But I'm going to give them the growing dividend, and I'm going to say 5 of 8. It is one that's on my watch list. It is one I am interested in. I have not done more of a deep dive into the financials. I have looked at, like revenue we saw there, and looked at it a little bit. I do like them overall. I don't like that they're issuing more shares. Their debt is pretty good, but I have not done a deep dive through the rest of their financials. So let me know if anyone has you in their portfolio, Clear Secure in their portfolio, and what you think of the company. How long have you held it? How is it doing for you? Would love to hear from you in the comment section down below. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notifications bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community and drop a comment down below. Let me know what you think of Clear Secure. Let me know what you think of YOU, the stock. Is it in your portfolio? Again, is it one you have been watching? Or maybe you were part of the selling today. If you sold, let me know why. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Don't forget to come back and check out our portfolio update on Sunday. We'll see you in that one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm willing to share my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice of counsel, a certified financial advisor. And again, for those of you who watched to the end, I really do appreciate it. Don't forget to hit that subscribe button on your way out if you haven't done so already. Hit that thumbs up. Share with anyone you think that might find value in the content. Drop a comment. Let me know what you think of the videos. And special thank you for watching to the end.